Good morning, traders. Welcome to this video again on the euro dollar and pound dollar. My name is Chris from Elite Currency. And yeah, we see the euro dollar dropping. Maybe you saw my wave analysis yesterday. If you did, then you saw me drawing an arrow like that and a bear flag and an arrow like that. So far it is doing exactly that. I think that price is making a bearish ABC pattern after we had what looks like a clear 5-wave pattern to the upside. Let's use normal candles here for a second. And yeah, if you look at this, it looks like the end of a 5 of C, and it looks like we have a clear 5-wave pattern. So if we put a fib on that price swing, I'm expecting that ABC pattern, as I mentioned on Monday, to end somewhere at these fibs, but not break this bottom at 116.02. If it breaks that bottom, of course, that invalidates the 1-2 or ABC pattern, 1, 2, 3 or ABC to the upside. In both scenarios, we have confidence expecting a price swing to push up after testing these fibs. But if it breaks that bottom, of course, at 116.02, then both outlooks are invalidated. And we're looking at a deeper bearish retracement. In that case, yeah, we might see, let's take a look at this 4-hour chart here. We might see price go into 115, for instance. All right. So let me redo this here a bit. There we go. So let's see if it breaks this bottom. Of course, there could be more downside pressure, obviously, to 115, 114. For the moment, I think that this is a break, pullback, and continuation. We're looking at the potential second or maybe even third break above the 20-1 EMA. The second break here in the 20 EMA didn't go all too far. So I think the bulls have an edge. We have all the moving averages aligned. So I think there's a better chance for price to basically bounce anywhere around here and at the bottom of the 21 EMA. I would say 116.80 up to 117.50 is kind of the best zone to look for a bullish bounce based on support levels. And see if we can get a rally up. I'll be looking for candlestick patterns to confirm that, to confirm the bounce here on the 4-hour chart. We're looking for the end of the ABC to look for a bounce back up again and try to look for candlestick patterns to confirm that. Then we'll be basically looking for buys based on the candles that arrive on the 1-hour, 4-hour chart to see if there's a bounce. Also, time patterns could help. So if you get a drop like that and I see a push up and then I see a higher low and then a bounce up like that, breaking through a trend line like that, that could indicate the higher low here, and the higher break of this fractal could indicate already the higher high. The break above the 21 EMA zone, of course, could help too. All of that indicating that this bearish mode is over, the ABC, and we're back in the bullish mode, okay? So let's see if it gets that deep. If it doesn't, and it just stops right here and starts to break above the 20 EMA, that might be it. I think it will go deeper. I'm just talking about what if scenarios. I think it will go to, for instance, 117.25. I think could be the ideal level to consider or to expect maybe. But if it doesn't get that deep, let's say, then what would I do? Well, my backup scenario would be a break above the 20 EMA like that, but not trading this break to be honest, but looking for a triangle or flag as the 21 EMA curls up like that, and this corrective chart pattern needs to stay above the 21 EMA zone. I'm really stressing that's so important. If it does that and then it starts to break above the fractals, that is the continuation signal. Whereas if it breaks above but drops like that and we see price in the 21 EMA zone and then starts to break below the 20 EMA zone, it's going to go deeper again. And this was just a correction with a bigger ABC pattern like that. So very important, if it breaks above the 20 EMA, how does it react after that? Does it stay above the 20 EMA or does it drop back into the 20 EMA and break below it again? Key difference into expecting a bigger bearish correction or indeed the uptrend continuation. All right, so yeah, a lot of that I explained actually in my wave trading webinars. I just had one on Monday. Check out elitecurrency.com/webinars. In this wave trading webinars, I discuss not only waves, but also price swings, how to practically trade and analyze waves. A lot of good stuff there. Some of this is part of my SWAT course, but my SWAT course, of course, is way bigger. It's 22 hours, 70 videos. Now, don't get scared by the length. I really take a detailed approach so that everything is clear. But I think you will like the flow. You will not be, I don't think you'll be overwhelmed by the length of it. So check that out if you want by services, Forex, and CFD. We will have a Black Friday special. I think somewhere 2 weeks from now, I believe. So keep an eye on that if you want to become a SWAT member or Black Widow member or any of the EAs. If you want to have a discount, that's coming up 2 weeks from now. All right, pound USD breaking to the upside here. As I said, if it breaks above these tops, there's not much space until we hit 132.50, 132.75. Therefore, possible trade, but on a lower time frame because there's not much space. Because if it breaks these fractals, we're looking at 131.98 here, 132, let's say. That's just a little space. So on a 5-minute chart, that made sense to me. Let's go back. As you can see here, you got a break. And this is what I'm talking about. Look at this price action neatly making a flag above the 20-minute zone. So that type of price action is great for intraday trade from 132 up to 132.50, 132.75 because 50, 60, 70 pips is great on a 5-minute chart. It's not so much on a 4-hour chart, specifically on the pound USD. So this flag is exactly what I talked about on the euro-dollar 1-hour chart. If that happens with the fractals above and then breaking above this, that looks like a continuation pattern, and that's what happened. So we got some consolidation after that. It's struggling here at this 132.75 zone, which is logical. It's a strong resistance area. And let's put the fib on this price swing for the moment. Price getting inching closer to the 78.6 fib. I don't think it's a good spot for any longs. It's too close to resistance at this point, in my view, even on a 5-minute chart. Too close to that fib. And I think it could be making an ABC pattern. So, yeah, if anything, I would be neutral. If anything, I would basically wait for some kind of bearish candlestick pattern here on the 4-hour chart for potentially reversal trade, small reversal trade, back down to 131.75 in the previous support zone, the previous tops, actually, previous fib. And some bottoms here. So some reversal potential at 133, I think down to 131.75. That seems the most likely path of least resistance. But that's a reversal idea. I always trade those, if I trade those, with less risk. Because, of course, those are just riskier trades. So, yeah, let's see. If the retracement is shallow and I see a bull flag, then, of course, there is a continuation possible higher if we get this continuation pattern on this 4-hour chart or even hourly chart, of course. If we get a good, decent bull flag like that, that's also possible. That's it for today. Back next week with an update on the euro-dollar and pound dollar as always. And wish you all great trading. Cheers. Bye-bye.